Hi, David Phelps here from the Freedom Founders Mastermind community. So many people got caught off guard by the coronavirus government mandated shutdown of our economy. Well, we all got caught off guard by the virus. We didn't know what was going to trigger the next reset or recession. But here's what we do know. We live in market cycles. It's been going on for 170 years. Back to 1854, we've had up markets and then down markets, up markets, down markets. Some go higher and longer than others, and some drop more precipitously than others. But we always have cycles, generally every 5 to 6 to 8 years at most. This last one went on for a little over 10 years. So it's not a total aberration, but look, we're going to have cycles. Get used to it. The problem is that our traditional models of financial planning, retirement models, Wall Street models are not built to protect you, me, the individual investor. There's no way. It's too efficient of a marketplace. And by efficiency, it means that there's real-time data so that high-speed computers and bigger Wall Street conglomerates with bigger money, they can play the game. We don't have a chance. In fact, they leverage our money. They arbitrage our money. Whatever we put in the market, it gets arbitraged. Yes, we can make money or build wealth in an up market, but then it just gets wiped away, big tranches of it, where we have a downturn. And it takes too many years to build back up again. So you can't keep doing this market cycle and not playing the game by the new rules. Well, these aren't new rules to me, but they're new rules to a lot of people. What I'm trying to say to you is quit putting your head in the sand. Look, you can't just follow the majority. Just because your CPA and everybody else says, go put money in a 401k or defined benefit plan or cash balance plan or buy cash value life insurance or buy this annuity, look, if you follow the majority, you're going to get majority results, which means average, which means mediocre. Do you want to be in the majority? If you wouldn't be listening to this video right now if you didn't want to be in what I call the 2%. Doesn't mean we're better than other people. It just means we follow a different path, a different pathway to get to our real goals, which is not just to pile up money, but we want to exchange the money, exchange wealth so we can live a life of freedom. So we get to do what we want to do when we want to do it. It doesn't mean you quit work. Doesn't mean you have to retire. It just means you get to live a life with freedom and have those options and choices. Far too many people don't have those choices or options, never in their life, or they don't finally have them until their health is no good or their family is grown and gone and they can't live the way they wanted to. It's a shame. It's a construct that's been set up and passed on by generation after generation after generation. If you're going to make it and get beyond the point of where you are right now, no matter how successful you are, to a point of where you have freedom and security and peace of mind and sustainable cash flow and not worried about running out of money by the time your life extends on into your 70s, 80s, and 90s, you've got to play by different rules. It's a different game. You've got to change your model. When people come to Freedom Founders for the first time, one of the first things they've got to do, they find themselves wanting to do, is to go to their advisors and say, hey, I need to shut down those tax deferral plans that everybody told me to do. Shut them down, shut them down. Their advisors want to push back and say, no, how could you do that? That's the way we've always done it. And don't worry about the markets. Just hang on for the long haul. It'll get you there. Times are different. We'll never go back to what they were 10, 20, 30 years ago. Even if those models worked then, we're in very volatile times right now with a massive debt that this country's carrying, that individuals carry, that companies carry. The debt load has changed everything. We're going to have more volatility, not less. So you've got to get in that game. The inefficient markets where we can buy assets, tangible assets, business assets, real estate assets, we can buy them at price points that give us sustainable cash flow. See, it's all about the cash flow. It's not about how much money. It's what that money, that capital, that equity is doing for you. If you haven't learned how to orchestrate it into cash flow, you really have no security. And that's where the problem lies. So my point to you is, understand that we're going to have market cycles. You don't have to be an economist. You don't have to have an MBA in finance to be able to run the cycles. You just need to be part of a group, a community who gets it. You need to be with guides that have already gone down this path and figured this out. See, your traditional advisors, they're still trading time for dollars. They're just selling you the investment of the day, what they believe in, what they know. You've got to find people who have done it, who have gone there, who have made the steps to gain freedom and know how to play in the markets with the cycles and run those mechanics, those investment metrics, and gain through the inefficiencies of those markets. It's what we do. It's what I've done for 40 years. It works. I know it works. So what are you going to do different next time? That's my question for you. Think about that one.